Namaskar. A warm welcome to all of you on our YouTube channel CA Sansaar. Myself CA Vivek Khurana, and today we will discuss on very important section of Income Tax Act, section 80JJAA. And for discussion of this section, we have with us our guest speaker CA Vipin Garg ji. Vipin ji, a warm welcome to you. And my request to you, please guide us regarding section 80JJAA. And before that, my request to all of you, please subscribe to our YouTube channel and also press the bell icon. Thank you. Now over to Vipinji.
Hello friends, good afternoon to all of you. I hope that you all are safe and healthy and enjoying the quality time with your family, and definitely well away from this epidemic COVID-19 disease. So before going into my discussion, I would like to thank Vivek sir for giving me this opportunity to present myself in front of the quality audience like you. So now, as sir correctly said, today we are going to discuss on section 80JJAA. So basically, my dear friends, I have divided the whole discussion in 6 parts. First part related to what is the need of discussing this section, how much important this section is for us to understand. The second part, what was the purpose of the government to bring this section into the Income Tax Act. And third, the most critical part is the eligibility criteria. Who all are eligible under this section to take benefit of this section. And fourth one is the quantum of deduction. My dear friends, the quantum of deduction is something that will definitely attract you, that will definitely create your interest. If you have not seen the section up till this point, then definitely you will at least once go through this section after hearing the quantum of deduction. And in the fifth part, we are going to discuss there are some additional conditions being imposed by the government just to prevent the abuse of this section. That means just to ensure that the benefit of this section is actually taken by those assessees who are actually eligible for this reduction, and to the extent they are actually eligible for it. And in the last part, we will discuss a few FAQs, which I believe, after hearing me out on this section, which could arise in anybody's mind. So I thought it's better to make them part of this discussion. So now we will discuss every part separately. So first, we are discussing the first part, which is why we are discussing this section. My dear friends, this section is since 1998, and somehow still few professionals or consultants or my dear friends are unaware of this section. Further, we have not seen very regularly that we are advising this section to our clients. Even those who are aware about this section, for some reason, we are still not using this section so regularly as compared to other chapter 60 deductions like ATC, like ATD, ATG, ATU. All those sections we are advising the clients also very regularly. We are keeping a watch on those sections, but particularly for this section, what I am feeling is, all the assessees who can get benefit under this section are actually not getting the benefit due to any reason. And further, as we all know that in today's era, traditional practice won't fetch you that much of reward. You have to make value addition to the client in order to achieve a certain level in your practice also, because that will create a very good impression, very strong impression on your clients, and this can add up your practice to an extent. So I hope everybody is clear that how important this section is for us to understand. Now, second part of our discussion is what was the purpose of the government to bring this section into the Income Tax Act. My dear friends, the purpose was very loud and clear, was very, very simple, to give incentive to the industry. That means encourage them to generate more and more employment in the country. More the employment is generated by the assessee, more benefit assessee will get. So basically, it's a section which can be an eye opener for lot many employer, for lot many industries. So let's analyze the third part, which is related to the eligibility criteria. This is the most critical part, my dear friends, and I request you to kindly hear out this very, very critically, very carefully. So, my dear friends, as we discussed that this section was introduced in Finance Act 1998. At that time, this was limited only to certain specified assessees only, and even to those assessees also, there were few conditions, which were not that easy to comply with. So, all in all, it was not easy to take benefit of this section because of those conditions and because of the limitation of this section. But are those limitations? What are those conditions? We'll discuss one by one. The first limitation is that section was only extended to manufacturing industry in Finance Act 1998 when it was introduced. That means it was only available to manufacturing industry. It was not available to service industry, be it a hospitality sector, hotels, restaurant, be it IT sector, or even to traders also. This was not available. And even to manufacturing industry also, the benefit was available only for the employment of workers, factory workers, or we can say laborers. If any manufacturing industry generates employment for white collar employee, then also the benefit of this section was not available. And the conditions, the harsh conditions, the conditions which were difficult to comply with. First condition was there was a minimum threshold limit of additional employees, of hiring of additional employees to become eligible to take any kind of benefit under this section. What was this? What was that minimum threshold limit? The minimum threshold limit was 50 or 10% of the employees employed in the previous year, higher of the above. I repeat, 50 or 10% of the employee employed in the previous year, higher of the above. An employer, an SSE, has to employ additional staff to become eligible for this section. We can take an example to better understand this limit. Let's assume in the previous year, the SSE was having 400 employees with him. So 10% of 400 is 40 or 50, whichever is higher. So obviously 50 is higher. That means that particular SSE has to hire additional 50 employees to become eligible to take any sort of benefit under this section. Now, let's take a reverse example. Instead of 400, let's assume that the SSE was having 800 employees with him in the previous year. So now 10% of 800, 80 and 50, whichever is higher. Obviously 80 is higher. So that means he has to hire minimum 80 additional employees, 80 additional workers to become eligible under this section. That's a very harsh condition. That was a very tough condition to comply with. And the last condition was those eligible employees must have worked for that employer in the concerned financial year for a minimum period of 300 days. My dear friends, that means what? Whosoever employee has come to the organization after 4th May, in respect of those employees, employer cannot claim any benefit under this. So somehow, by looking at these conditions, the purpose of government of introducing this section was not achieved. Somehow, government also realized the fact, and in Finance Act 2016, they have done the major amendment into this section. After amendment, how the section looks like? What was the changes, major changes they have brought in? We can say the whole section has been rewritten by the government in order to extend the scope of the section, plus in order to relax the conditions which were there in the Finance Act 1998 when it was first introduced. So after amendment, how the section looks like, and we will compare it with the pre-amendment scenario also. So as we discussed in the pre-amendment scenario, it was only available for the manufacturing industry. Now, in the changed scenario in the amended section, now it has been extended to the all the industries, whosoever is generating business income. I repeat, whosoever is generating business income and not the professional income. That means what? That means still this deduction is not available to professionals, but it is available to all the category of business income. The only condition is that particular SSC must be covered under section 44AB, which is, as we all know, tax audit section. That means that particular SSC is required to get his books of accounts audited under the Income Tax Act under section 44AB. This is the only condition. And as we all know, the threshold of falling under this section is very low. Like the turnover up to financial year 1920, the turnover, if any SSC is having a turnover of more than 1 CR, he gets covered under this section. And even in the latest budget also, it has been proposed to increase this from 1 crore to 5 crore, but only for those SSCs where the cash transactions are less than 5%, either the payments or the receipts. So in case the cash transaction goes beyond 5%, then again it will come back to 1 crore. So now we can assume that how many additional SSCs gets covered under this section. Now you can find your list of clients and you will see lot many SSCs are covering in this particular section and can take the benefit in this section. Now we come to the second limitation, that it was available only to the workers. Now since this section is its scope has been widened from factory to other industries also, so definitely workers might not be there in case of service industry, so they have to widen the scope of worker also. Now the government is saying whosoever is withdrawing the salary up to 25,000 on a monthly basis in respect of all those employees, SSC can avail the benefit under this section. Third condition, which was the most critical condition, most important condition, which was the most difficult condition, we would say, that the threshold of minimum additional employee to became eligible under this section, 10% or 50, whichever is, now this condition is completely erased out. That means what? That means even if you hire one single additional employee, you can claim benefit under this section. This is a huge relief being given by the government, my dear friends, to the SSCs. The fourth and the last condition was those eligible employee must have worked with the employer in the previous year for at least 300 days. But now this condition is also relaxed. From 300 days, the period is reduced to 240 days and further to 150 days for the apparel industry. That means if you belong to apparel industry, then the condition of 300 days comes down to 150 days. In Finance Act 2018, it has been further extended this benefit of 150 days to leather industry and footwear industry also. That means in today's scenario, if you belong to apparel industry, leather industry, or footwear industry, then the 300 days limit is reduced to 150 days, and for other industries, it has been reduced to 240 days. So, my dear friends, we can see how much relaxation is being given by the government. The scope has been extended to all the industries. So, it's a perfect opportunity for all those SSCs and professionals to take benefit of this section. For professionals, definitely they can pass on this benefit to their clients and obviously create their image also, and that will help them to grow their practice also. Now, my dear friends, we'll come to the point of quantum of deduction. This is a most attractive point, most interesting part of our discussion. The quantum of deduction is available to the employer in respect of cost of those additional employees in the form of salary which he incurred in the concerned financial. And the quantum is 30% of that employee cost. 30% of those additional employee cost which he hired in the concerned financial. And this 30% will allow not only in 1 year, it will be allowed to the assessee 3 years separately, 30% each. That means what? That means in totality, the deduction under this section is allowed 90% in 3 years. 30%, 30%, and 30% in 3 years. That means the assessee now can claim benefit of cost of additional employees up to 190%. 100% in profit and loss account under section 37(1) while he is calculating the business income, and 90% in 3 years under this section. 30, 30, 30. Now we'll take up an example to understand the quantum of deduction, how we are calculating the quantum of deduction. Let's assume there is an assessee who employed 5 additional employees in the concerned financial year, each getting a salary of rupees 20k per month. And these employees were with him for the whole 12 months. Then the total additional employee cost incurred by the assessee was 20k into 12 into 5, which comes out to be 12 lakhs. Hence, the employer can obviously claim this 12 lakh in the profit and loss account as an expense under section 37(1). Plus, he can claim 3.6 lakh deduction in the concerned year, the concerned financial year under this section, 3.6 lakhs in the next year, and 3.6 lakh in the third year. So, in totality, against the expense of 12 lakh, he can claim the benefit of 22.8 lakhs. 12 lakhs in P&L, 10.8 lakhs here. So, my dear friends, by looking at the quantum, you must note that this is a very huge implication on the assessee. The benefit of this section is very, very huge. It's just about a matter of our understanding and our identification of the clients who all are eligible under this section. Now we are moving to the fifth part. As we discussed, there are some additional conditions which assessee need to fulfill, which government imposed on assessee, just to prevent the abuse of this section, or we can say just to ensure that the deduction is taken by only the eligible assessees and to the extent they are eligible. The first condition is it should not be as a result of splitting up or reconstruction of the existing business, like merger or demerger. Why this deduction is not available to me? Because it is not creating any additional employment. Because the purpose of this section, as we discussed, to give incentive to those who are generating employment in the country. If we are merging the two companies, then obviously the employees of those two companies will going to be the employees of this merged company. So there is no additional employment that we have generated. And similarly, in case of demerger. Second condition was it should not be the result of acquirement of the existing business by any assessee from any other assessee. Like if ABC Private Limited is doing any business, and if PQR Limited comes in and asks to purchase that ABC Limited business, the whole business, maybe in the form of slump sale or otherwise or other similar arrangement, then again they are not creating any additional employment, and hence this benefit is not available. The third condition is payment of salaries should not be made other than by account check, bank draft, or bank transfer. Again, my dear friends, I'm presuming this is to avoid bogus salary payments, because in cash, you won't be asked for any further evidences, and the assessee can claim the bogus salary payments also. Just to avoid this, might be government has kept this. The fourth condition is very, very important, and we have to listen very, very carefully, is that the employee who does not participate in the recognized provident fund, in respect of those employees also, this deduction is not available. That means employer has to ensure that those additional employees are the part of participating member of the recognized provident fund. to take benefit under this section. The fifth one is an employee for whom the entire contribution is paid by the government under employee pension scheme, then also this deduction is not available, which is very logical also, because then employer is not incurring any expenditure. The contribution is paid by the government. So if the employer is not incurring any expenditure, so there is no question of benefit under any section. And at last, which is again a very attractive condition, especially for chartered accountants, a certificate from a chartered accountant has to be obtained before the due date of filing of the return under income tax. It means chartered accountant will definitely come into the role, and assessee has to obtain the certificate from the chartered accountant who confirms that the assessee is eligible to take benefit of this section. And again, the format is also prescribed by the government of that certificate in the form of Form 10DA. This Form 10DA is very frequently available at income tax site or at various sites. So you can just Google out Form 10DA, you'll be able to find out very easily the format of Form 10DA. So my dear friends, this is all about this section. Now we'll come to the last portion, last part of our discussion, which is FAQs. So my dear friends, one question again, which is not covered in FAQ, just came into my mind is, let's suppose if any SSC just started the business in the first week, then what will happen? Who all will going to be counted as the additional employees? My dear friends, in the first year itself, whatever number of employees you are going to hire who are eligible under this section will be counted as the additional employees, and the benefit of this section start accruing from the first year itself for the next 3 years in respect of the first year costing of those additional employees. Now the next FAQ, next question, which is very important. Let's assume employee was hired. Let's assume in January, February, March. Obviously, then the condition of 150 days or 240 days, as the case may be, will not going to be fulfilled by the employee. Then will the employer be denied for the benefit under this section permanently? Is this not a generation of employment? See, my dear friends, before 2018, this was denied to those in respect of those employees. This deduction was not available. But in Finance Act 2018, this point was also gets covered. And now, if those employees continue working with the same employer in the next year, in the succeeding year, then definitely they are going to fulfill this condition of 240 days or 150 days, as the case may be. Then it will be assumed that those employees were hired in the succeeding year itself for the purpose of giving benefit under this section. And then from the succeeding year itself, 3 years benefit will start accruing to the assessee. So now it's again a welcome relief being given by the government, and now this point is also very clear to everyone. Now the second point, now the third point, the third FAQ is, does additional employee cost means cost for net addition in number of employees or gross addition in number of employees? My dear friends, answer is the cost in respect of net additional number of employees. We can take an example to understand this point in a better way. Let's assume assessee was having 100 employees as in the last year of the previous year. He hired 20 employees during the current financial year, and 5 employees left this organization. That means earlier he was having 100 employees, now he is having 115 employees. So the benefit in respect of only 15 employees assessee can claim under this section, not in respect of 20 employees, because in nutshell he has generated employment for 15 employees only. Now the second last FAQ is, what if assessee is paying salary to additional employees, both in cash to few employees, and through bank transfer to other few employees out of those additionally hired employees? Can assessee still claim the deduction under this section? And if yes, for how many employees? My dear friend, the answer is yes. SSC can still claim the benefit under this section, but only related to those employees to whom the salaries were paid in account paid check, bank draft, or through electronic transfer. The last question in the list of FAQs is, let's assume out of the hired employees, few are the participating member of recognized provident fund and few are not. Due to any reason, few are not the part of recognized provident fund. Can SSC still claim the deduction under this section? And if yes, again, for how many employees? The answer is still yes. SSC can still claim the benefit, but only related to the cost of those employees who are the participating member in recognized provident fund. So, my dear friends, I hope this section is now clear to everyone. And if you find it any interest in this section, I'll request to kindly go through, make analysis at your own, and start giving benefit to your clients. If
One
even a
question.
single professional start giving benefit
One
to
question is
their
mine.
clients, to his clients, then definitely I'll assume that the purpose of this discussion will definitely achieve. Now over to Meet sir.
Vipin, one question is in mind.
Yes, sir, please.
Don't you think this is the new opportunity for the chartered accountants? Like
Sir,
you said,
definitely,
we need a certificate from a chartered accountant. So this is a new opportunity.
sir, definitely not only from the point of view of certification, it is a new
Yeah.
opportunity for the new chartered accountant who just come into the practice and who just start his practice and who's getting the clients. And in the first with the first client, he implemented this section.
Yeah.
Now we can assume what sort of impression on the client he will leave. And through one client, he can avail so many multiple clients, and he
Okay.
can take his practice to the next level.
That's very
This
nice.
is the
That's very,
main point. This is the main message I want to give through this section.
yes. So I hope members will take benefit from this section 80 double J double A, and my sincere thanks to Vipin ji for giving
Thank you
a
so much.
wonderful presentation.
My
So
pleasure.
thank you very much. Once again, my request to all of you, stay home, stay safe, stay updated. We care for you. Thank you very much.